For this, our moderator is going to be Ms. Hemalatha Saptarshi, Head Enterprise Sale, Iris GST, and our panelists are Mr. Ajai Sachchar, Chief Business Officer Practus, Mr. Chetan Borkar, CFO Madison World, Mr. Vimal Ladha, CFO PSIPL, that's Property Solutions India Private Limited, Mr. Sachin Chitlange, Vice President Finance, Capgemini, Mr. Shekaar Subramanian, Head of Structured Finance, Fedbank Financial Services Limited, Fedfina, Mr. Ankit Jain, CFO, Aarman Group, Farm Easy Marketplace, Mr. Balkrishnan Chandak, CFO, CloudExcel.
All of you are having a wonderful time with all the excited sessions you've been having so far. A very warm welcome to all our eminent panelists. The traditional role of a CFO has always been taking decisions around accounting policies. The recent change, the CFO's responsibility has undergone a vast change. The CFO is now not only a financial authority, but is also a strategic partner to the CEO, getting involved in the critical decision making and the implementations. You all must have heard about the very famous slogan about Pepsi, "Ye dil mangi more." So similarly, now the businesses are looking at the CFO and asking for something more. And this obviously is putting the CFO under a lot of pressure. But obviously, this also gives the CFO an opportunity to interact and also justify and have a good interaction with the organization and the stakeholders. India is fast growing into a global competition. And at the same time, the CFO's role is becoming more significant day by day. While digital literacy is required by all the stakeholders in the organization, the CFO has to be always updated with the latest technology. This technology, fast-moving technology, which empowers the CFO to redesign the financial processes and also help in big data, the financial analysis and the analytics part of it, into the data insights part of it. So we have with us eminent CFOs from the industry who are with us to share their thoughts and their experiences. So we start with Ajay. Ajay, how do you think the role of the CFO has transformed over the years with the digital transformation that's come into place?
Sure, thank you, Emma. Before I answer, let me just clarify to the entire audience that we will be short. I know everybody is thinking such a big panel and holding everyone's attention just before lunch is the most difficult task. But we'll try and be short. And that's why we'll try and see just one question per person. So the lunch is outside and will be out soon. Coming to the question that Hema asked, I think there are multiple things that have changed in CFO's life since the whole digitalization has become part and parcel of everyone's life. I'll try and maybe be very crisp in my answer in terms of bullet pointers. I feel there are 6 pointers in which I can summarize the whole scene. The first is the strategic focus. I think with more and more digitalization, CFOs are now getting more time to focus more on the strategic side. Or at least I would say that they want to do that. One of the reasons why they want to bring digital transformation in the organization is because they are right now too much focused on the operational and they are stuck in the operational pieces. And the real value add of a CFO is not really coming out. So the organizations who are trying to do the digital transformation, this is probably the biggest, most agenda in their mind to bring value add and business partnering role to the CEO. Second, I would say that the focus is on the data-driven decision making. I think digitalization helps you take data-driven decision making, and that is much faster. Because if you are, still relying on manual Excel sheets and then trying to take some decisions out of it, one, you cannot be sure about the sanctity of the data. Second, the speed will always be a concern, and that's the reason, integrating it with your ERP and, having a layer of a BI on top of it, always make sure that the sanctity of the data is there. Nobody is intentionally or unintentionally tampering with your data. So you can be sure about that. And because Power BIs are now, all the BI tools are now available with the apps on their phone, so you can clearly and very fast way you can take decisions. The third, I would say, the focus has increased on the risk side, because every CFO, the moment he is out of the operational pieces, he or she wants to focus on the risk management side. So there are new tools that are coming in which are helping you take risk-averse decisions. And risk could come from multi-facets. It could also bring in from your customers, whether he's a credible customer or not, whether your payment will be paid in time or not. So credit worthiness of the customer. So it could come in from various angles as well. Fourth is, I would say that CFOs are now trying to, more and more CFOs, their aspirations are to become the CEOs. I think because of the capabilities that they bring in. So cross collaboration with other teams, other functions is very, very important. Now you are the head of finance, but if you are not giving inputs to grow the business, and which means you will need to work with the head of sales and make sure that the growth is on the track. You're not working with the product head to make sure that you are building new products. So CFO's collaboration and capability to work with multifunction is very, very important. Fifth, I would say, is focus on the innovation side. I think every CFO these days is focusing on how can I bring more innovation into the product or the services and keeping client into the mind. So I think, and for CFOs, both internal as well as external, clients are our priority. So for moving towards client delight. And last, I would say it's not on the professional side. With more and more digital transformation happening, I think CFOs are trying to also take out some time for themselves, for the family. I think all of us in this room have been always drowned with the work, and we're trying to just optimize the efficiency. I think now people are becoming more focused on spending time with themselves. I'm hearing a lot of discussions around early retirements, financial independence. So people are thinking, if I can get this thing sorted, can I spend more time with myself? Can I spend more time with my family, with my daughter, with my kids? So I think that's the non-official side, the personal side, but I think that's also very, very important.
Yeah, thanks, Ajay. I think you have touched a very important point, and the importance of technology. And Sachin, how crucial is it for the CFO to embrace the digital technology? If you can just throw some light on it.
Yeah, thanks, Hemalatha. Hi, everyone. I like what Ajay said. A lot of CFOs are aspiring to become CEOs. So take it as a compliment. He's a sales guy, but for all of us, yeah. So I think all of us here come with a lot of experience. So I'll share some examples of what we have done within Capgemini Finance. So in 2018-19, when COVID started, so we as a small group of finance people, we said people panicked. What will happen to offers made in the market? What will happen to cash which has to be collected and so on? Software industry was no different. So we said we started analyzing data. I mean, some group of finance, nobody told us to do it, but some of us said it's similar to 2008 JP Morgan subprime crisis and so on. So we started analyzing the data, how much time it took that time to recover back to normalcy, how much cash discount we had to give to customers, to get the money back, how much time it took to, get the sales cycle going. Instead of 2 months, it took 5 months. We shared all the data with business. That helped pacify business a lot. They were equipped with a lot of intelligent insights, and I would not say the situation was exactly the same, but yes, like here we had to arrange laptops immediately so that people can work from home. So somewhat different situation, but they at least had a lot of data to prepare negotiation strategies with customers, to know what to do with employees and how to react and so on. So that was a small story which triggered establishing a data analytics cell in 2018 within finance team at Capgemini India, and today I lead that team of group analytics, which is now a group analytics team. And that's where the power of data started, coming now. Today we work with, as Ajay said, business partnering is very important. So we have full-fledged data analytics cell which works as part of finance organization, giving insights to all the business unit heads on what skill is undersold, what experience is undersold. We are in the IT or consulting business. So if you are underselling the experience, so we compare the HR attributes of an employee with what rate he has been positioned or what role has been positioned. So a lot of insights which go and help business decision making. Now, to answer your question on the technology side, I think each company is very different, unique with its culture. So, like our company, we make acquisition every 3 months, small acquisition, and a large acquisition like iGate or Patni every 3 years. That's how been our inorganically we have grown more than organic. So we acquired a lot of people, systems. It's very difficult for such a massive company, 200,000 people in India and 400,000 worldwide, to have harmonized, digitized ERP and so on. So we said, we'll adopt bolt-on systems. So we have our core ERP, which is on Oracle, but we said we'll adopt bolt-on systems on top of our existing systems. Like the gentleman on tax, we said we'll build a tax system, litigation system on top of our ERP. ERP will feed data to that system, and then whatever digitization we need to be done. So when GST came, we developed something on our own to blacklist vendors who were not uploading invoices and so on. So that is how we went on our digitized journey, because you cannot change for such a massive company an ERP overnight. So we built a lot of bolt-on systems to improve our processes on customer invoicing, OCR for vendor invoicing and so on. And now once the data is streamlined and so on, we have launched a big cloud, on the cloud transformation program to move to SAP, S4HANA and so on. So that has been our journey. I thought I should share some practical experience for such a large company on how we began our digital journey, because there is a lot of peer pressure as well. You need to go digital, every department needs to go digital. So everybody starts working in silos, and Mera RPA, robotic process automation, some other department does that. So we said, let's do bolt-on, but let's have a centralized philosophy on how to do bolt-on. So those were some insights. I thought some practical stories to share. Hope it was helpful. Yeah.
Thanks, Sachin. So thanks for sharing your practical experiences. So I hope it was useful for the audience also. So while we know that technology keeps changing day by day, there are a lot of things that's coming, a lot of updates coming regularly. We can't forget our traditional finances. So Ankit, this question is for you. How do you embark on a balance between traditional finance and emerging technologies?
So I think, Hemalatha, the way we work is that all traditional practices, including regulatory requirements, right? Whenever we initiate or kick off any project, we ensure that finance team is part of those discussions, so that minute details can be captured at their own itself. And whenever new product or new approach is being adopted, it is taken into consideration. Considering we are a marketplace, we are guided by various other regulatory requirements as well, right? For example, DPDA guidelines, whether we say, because we also do nodal accounting and all, right? So everything is taken care at the time of initiation itself, and that is how we keep track of all the changes, required changes in the project itself.
Thanks, Ankit. So data is precious, right? So, but the value, you can get it only when you have some insights. And insights now, AI is the latest. So Chetan, if you can just throw some light on, what does data analytics, AI and machine learning play a role in the CFO's decision-making process?
Sure. Very good afternoon to everyone. Essentially, if we go and track back our careers, when we started and look at 1993 when I started my career, we used to actually write books, From there, in 98, we had typewriters which actually typed our balance sheets out. To 2000, when we actually had Microsoft Excel and Word and everything coming into each and every office. I remember in 2004, my erstwhile CFO at McCann Erickson came and told me, I hate Microsoft, and in complete frustration. I said, sir, it is helping us completely in everything that we do. ना ये माइक्रोसॉफ्ट आता ना मुझे इतना एनालिसिस करना पड़ता, बिकॉज मैं पहले एक ट्रायल बैलेंस थमा देता मैनेजमेंट को, वो खुश हो जाते हैं, ऑडिट शुरू होता, हम टाइपराइटर पे किसी तरह एक बना लेते थे बैलेंस शीट, डन. At that point, I thought a little ठीक है, but now when I think from 2004 to 2000, almost 24, in 20 years, the way we've used technology, right, whether it is fine-tuning and tightening and making it idiot-proof in our processes, because half of the people who work on our processes are idiots, let me tell you. And which half I won't come to, right? Every organization has more than 3 idiots. And you have to idiot-proof your process, because end of the day, we are the ones who are on the chopping block. Because God damn it, the CEO will turn around and say, I don't know who did it, it's your problem to find out and fix it. But your increment and your incentive for this year doesn't happen. Right? That's where it is. Coming to how data will use it, help us. Today, all the exceptions that get thrown out of all our reports is the data that the CFO uses to move ahead. For example, when I log into my system, every morning, there's something or the other that pops up. It could be so-and-so client hasn't paid bills for the last 6 months. So that's my next action point. What do I do? Block that customer from, or if it's a very prestigious client, call up the CFO of that organization and tell him that, sir, please, will you clear my bills? It's affecting my cash flows because I have a payout. I'm from the media industry. If I don't collect, I don't pay. But in many cases, if I don't collect, I break my fixed deposits. So that's how it is. So an exception comes out. When I get my MIS monthly P&L, right, it throws up budget variance, and it actually throws up, it flashes on the screen that this is where the data is. This is where the unit is not doing well. And then we write to the unit head to come back with a monthly plan, with a presentation almost every month saying that, what are you going to do to correct this? From the marketing side, from a customer side, we get a lot of insights on, because I'm coming from a media industry, marketing, media, we know each and every individual is profiled. Whether it is for bank loans, whether it is for making the next offer, or whether it is for, telling him what he's to do. Like my car is about 4 years old today. Already I'm getting a message from Cars 24. Do you want to sell your car? I said, नहीं यार Toyota है, अच्छा चल रहा है. कोई यूरोपियन कार होता तो मैं next year आता तुम्हारे पास, right? So data is used by everyone. I mean, I haven't even gone to a Cars 24 showroom, but he has my data. There are every conference that I go to, and sorry to say this, I give my card out, and then there are 7 times the number of cards given out, people chasing me for business, and that's good. But that is where data will play a very important role. I mean, today's data will tell you what to do next tomorrow.
Absolutely. Data is very important, and getting an exception report is further important so that you don't work and sit on all what is there that's normal. That is there within the tolerance or whatever is there. So there was one session in the morning which I was hearing that everything can happen without any human intervention, right? System can do the 99.99%, but that 0.01%, the human intervention that is required. So as a finance function becomes more automated, Shekaar, this question is for you. How can the CFOs ensure the human touch, especially the ethical considerations that has to be kept in mind?
Hi, thanks Hemalatha, and thanks everybody. Just to answer that, I'll go back in time. I'll just start with 2 small examples, which shows the ubiquity and the importance of the CFO's function with regards to technology and not so also. So, around 25 years back, a lot of these companies, many companies in fact, the CXOs, let me use a placeholder, CXOs, whether CFO or CEO, they were approached saying that, why don't you have your own website? This was during the late 90s when the internet was getting to be a fad. And they said, no, we don't need internet because our company doesn't do anything on the internet. People already know us, right? We are in the print media, we are there. Why should we have our own website? We'll do whatever we can. And you know what happened next? 15 years fast forward, same people were once again approached saying that, why don't you do some business online? And they said, no, we don't need to do business online. Why should we spend money on that? All our logistical supply chain channels, everything is offline. I mean, I don't see any reason why our customers will go online. We are still in the age of internet penetration and all that. And you know what happened later, right? They had to adopt. So the limited point I'm trying to make here is that CFOs, on the tech side, they don't need to be a programmer. They know, I'm not saying that you should learn Java, you should know Python, no. But you should be aware of what technological tools there are in the marketplace. Number one, what they can do for you. Two, what they can't do and also for you. That's also equally important. Just using tech for the sake of using tech is only going to create mayhem. You know, that's what I keep saying, that we are in the age of predictive AI, analytics, big data modeling, and so forth. These things cannot replace ethics, for example. You can't depend on them for governance, right? I mean, you can't say that since I have a nice AI model, my business is flourishing, so, you know, I don't need to worry about compliance and everything. It is only going to be done by humans like you and me. Tomorrow, if you are going to negotiate a huge credit line from a syndication of almost 5 banks, you can't have a machine talking to them. It's only you who are going to go and perform and convince the board to get the credit line. And that applies to a lot of things, including running the country also, talking to people. So that is where I think AI as a machine or as a technology has its limitations, but one should not blame the technology. I think the CFO should know how to use the technology at the right time. He or she will be flooded with a lot of proposals from different aspects of the business. Operations will come with this. Your board will suggest you to do something. At the end of the day, you should know the pros and cons of each technology and use that accordingly as a predictive medicine. That's what I think it counts. Because today, the CFO is not just the custodian of assets and budget. He is also the custodian of business transformation. You get a lot of pushback in your company if you introduce a new technology, correct? I mean, people say, why this new technology, jobs are going to be lost. Or even if jobs are going to be there, you know, it's going to make my life more miserable because I need to learn this thing. I need to go and put my guys through training. So be it. You have to make them adapt to the new generation, because what happens is you need to keep coming up with newer and newer insights for your business to be scalable. And for that, only technology can help you. Without technology, you cannot say that I'm going to do everything. But yes, like I said, the disclaimer here, the cautionary tale is you can't leave everything to technology. Like I said, compliance, ethics, all the other aspects have to be done by humans only. It's just using technology as a tool. So to sum it up, build your technology around the business, not the other way around. A lot of companies make the mistake of, because I'm in FMCG, so let me do one thing. I'm going to be a tech company. No, you cannot. Should not be. You should build your technology around the business and not the other way around. That's my humble submission.
Absolutely, yeah. That was very insightful. While the CFO needs to know about the technology and make use of the technology, should also be aware about the advantage and the disadvantage. All is not rosy, so there are so many challenges that comes in the way of the CFO. So Vimal, if you can please throw light on what challenges does the CFO face in implementing the digital transformation?
Not only CFO, it is like for the organization. So when we started our journey for digital transformation, basically what happened, nobody was interested because it was top-down approach. And as an experience, we can say that you cannot do a top-down approach in any transformation or any change. So you have to have buy-in of all the stakeholders. So we started doing sessions with all the stakeholders and then started buying in. The other challenge which we faced is people are afraid of job losing. So whenever there is a technology, people are afraid that my job will be at stake. So you have to give that confidence as an organization that okay, nothing will happen. And I can tell you from my experience that team members who came to me for the what will happen to us are the most happiest employees in my organization as of now, because they, after this implementation of digital transformation RPA, they got a lot of time to do other activities and got promotions. So that is one part. Secondly, we organization we attend a lot of seminars and this technology, that technology. You should not be blindly following every other company because your requirement may differ from the other company's requirement. So you have to evaluate what is needed for your organization. Your business is different, your requirement is different, your client is different, your vendors are different. So you have to understand what is needed for your organization. Don't blind. So do a due diligence of all the available tools, what is applicable to you, do that only. Don't just do it for the sake of anything. Third, your any solution has to have the scalability option, because today we see in GST, like if you implement any solution for GST, a lot of changes, every month there is some changes. If your solution is not scalable or ready to agile for that change, then you are find difficulty in that. So you have to find a solution which is more practical, more adapt to the changes, and it is compliant also, because especially in the labor laws and GST and income tax, you need a compliant software which is made life easy for us. Fourth and foremost, you have to keep patience. So a lot of time I hear that we have implemented, now ROI is not coming. Every solution is not going to give you ROI easily. It takes time. Sometimes it is more than 2 years to get the ROI. Whenever you go to board, okay, if ROI is not there, then why we are implementing this? So as a CFO or as a head of any department, you should be able to explain that right now we may not get the ROI, but in future it is going to make the changes. Every ROI cannot be tangible also. There are certain intangible benefits also which you have to look at. So these things you have to keep in mind, and you have to drive things.
Absolutely. Have patience is the main thing, being mantra. So as a CFO, the main, the function of a CFO would be always look ahead of the curve, right? So Balkishan, so looking ahead, what do you envision as the next frontier of digital transformation in finance? And how should a CFO be prepared to meet these challenges?
Thank you, Hemalatha, and good afternoon, everyone. See, I've seen changes in CFOs over the last couple of years, how they have transformed themselves, and with the current environment, there are so many technologies available, and there are future technologies which is going to come. For example, quantum computing is a live example. CFO, though it is at a very nascent stage, CFO has to look into it and see that what is the development happening in that particular area, and how can he adapt that into this organization. There are ESG compliances, so much requirement. From that perspective, he has to embed the ESG compliances into the financial processes also, which I foresee as a kind of a next level of requirement. Even the use of, means the conversion of a lot of technologies right now available, and so conversion all this technology into one platform is also one of the things which I foresee going to happen. And training of the skill sets development which is required for a CFO to develop his finance function, and to train his team members so that they can adapt to the new technology development. That is also what I foresee as a next level of requirement. So you have heard about open banking also. A lot of people have heard about open banking. So as a part of the next gen requirement is that CFO has to know what is the impact it will have on the business. How can he adapt to that changes? That's all.
Yeah, thanks, Balkishan. So, of course, along with the skill set, the mindset also has to be there. Identify the skill set. My skill set is always what a person is having, but creating a situation where a person feels he's able to take up the challenge is what is a CFO's role. Identify the mindset of the team members, identify the skill set, and then create a team which was, towards working for the goal of the organization is very important as a CFO. So thanks all for the panelists. Now we have some questions open for the audience. If you have some questions, we are happy to take it. Yes, please.
Yeah, I represent Almus Risk Consulting. My question to the entire panel, anyone can take it up. Like Ajay mentioned, when the CFOs are rising, something that they want to look is towards the risk management. And one area of risk management is pertaining to currency risk management or a commodity risk management. And this entire market currently is an OTC market. So with the AI and with technology, how do you, the CFOs, envisage this entire structure, because it's connected with the business and it's going to impact your EBITDA? If you have experience currently, or if you envisage in the future, how do you, what is your outlook towards this?
So, Sachin here. So, I will not take an example of currency, but I'll correlate with what we did in data analytics as part of finance in Capgemini. So, if you know, after post-COVID, there was a sudden spike in demand in software industry. There was a mad madness of attrition, and there was high demand. And I was cursing myself, why I am not an engineer, because I think engineers were drawing amazing paychecks for last, maybe 1 year back. So this was a big problem, and we didn't knew how to control the cost, because yes, there was demand, but the new business was not necessarily coming at that premium as against the cost which we're paying. So this was a problem, and always we as analytics team, we said we'll fall in love with the problem, not with the solution. Yeah. So that was the first. So the problem was attrition and how to challenge the forecast of the ARC, is the average remuneration cost, is the KPI which we call, where India is serving the world from software perspective. So every business unit, the ARC or the salary cost which was forecasted was going up and up. So we designed a tool based on past data, let's say past 6 months data. We designed a prediction tool on where you will land in next 3 months in terms of your ARC cost or the salary cost, average salary cost for your business unit. So it was like hiring premiums which you are paying, the levers who are going at what, are the costly people going or the less costly people who are going, people who are joining at what premium they are joining in the last 3 months, what kind of people we are promoting and what kind of salary hikes we were giving to promotions. Factoring all this data for each business unit for last 6 months, we were giving them to predict what in next 6 months where they will land based on the past data. And then we will use that prediction to challenge their forecast on how they would forecast, let's say X as my landing salary cost for my business unit by grade. And my tool would come and say, you know what, this is X plus 1. Because in last 6 months you hired so many niche skills, so many premium skills, so many people with higher hiring premium. So how are you forecasting lower when your past data says, this? Then they would go and correct. So this is how some of the analytics added insights to challenge the business on their forecast, as well as improvise and provide more insights. And then we improvised it further by adding levers to reduce the salary cost which was predicted. Like you can hire more freshers, train them. We established a training academy inside, which was capital intensive initially, but it paid off in the long run. So the data not only provided insights to challenge the business on forecast, but also provided some levers on how to contain the cost. I think similar thing can be done on currency as well. I think that's more easier because there's no subjectivity there. It's all based on past data and the business environment. Yeah. So if that correlates, I thought.
I'll just add one thing since this topic came up. I had worked for an entrepreneur. Basically, he was, since it's in the development phase, so he has developed a tool. It's purely on the data analytics. Like you have a lot of information available on the social media platform and all your mobile phone. The moment you give access to any tool, the entire data is getting sucked in by a platform. And just imagine that if you have captured 10,000 data points or 5,000 data points of a person, you can easily identify a behavior of a person. And then how can this data of a person, like your information about whether it is salary or whether it is about bank transactions, these are our standard thing which is being captured by a lot of tools. But just imagine on a social media platform or your contact list, if they are connected with different people. So that kind of data, when you analyze, usually by a data scientist, you can understand very easily a behavior of a person. If a person has a contact list of, let's say, certain people whose, I'll call it as a trust score kind of thing, is down, then the trust score of the other person will also get down. So this analyzing of data helps to understand a behavior of a person, whether this is the right person to deal with or whether it's not a right person to deal with. The same thing which I was trying to understand on the analytics side, by analyzing the data, you can easily get so much insight into a human behavior also.
I'll just continue or maybe just have a closure to the question that I asked. Thanks, Sachin, and thanks, Balkishan. The reason I asked on currency was something most of the CFOs face because it's like a market and no one can predict it. And effectively, it's impacting your business. So something that we have seen across in a lot of CFOs are adapting to something called as a rule-based hedging in terms of, because you cannot predict while you don't want a human intervention in terms of the rule. So there is a backtesting of a data of the currency, how it has behaved in the last 20 years and depict a rule which is tested 20 years, 25 years, and maybe that can be deployed by the, when a company has exposure to currency or a commodity. Just wanted to bring across this to you.
Yeah, but I would add one more point. I think for all the finance people here, I think everybody has skill set in the finance department. Everybody knows Excel, but it is more about mindset, which you also said. So I think thinking about the problem and then working with business, stepping into the shoes of business and trying to solve that problem is what the mindset change which has to come to the finance team under you, which is going to create wonders as a business partner when you're trying to solve the problem or provide solution.
Yeah. Yeah, we can take one question.
Thank you. Interesting panel discussion. My name is Manoj Agrawal. I'm the editor at a magazine called Banking Frontiers. My question is this: with CFO role becoming more and more strategic, should CFO start thinking like a venture capitalist thinks? And then does that expand beyond CFO? Because then it's business models and markets and competition and everything else. How can a CFO graduate to being like a venture capitalist?
I think when we look at entire API group, right, finance team act as a venture capitalist only. We ask for each and every business to give us the requirements and the expected returns out of those funds. And once they pass the minimum benchmarking which we had, then only they will get the funds. So we act as a venture capitalist as far as the finance team is concerned.
Chetan, you have anything to add?
Just on a lighter note, no matter how much CFOs become VCs, they will never get the equity from that function. That's the only difference. Otherwise, they are already true VCs.
Yeah, Chetan, if you can just add to this.
It's like, the VC role is so important. It's like Madam Sudha Murthy once said, I was the first VC in this country. I funded Narayan Murthy and told him I want that money back. Right? It's not the case nowadays. I mean, VCs are funding. Most of them are going down the drain. You see even unicorns of the past, 2 years back they were a unicorn. Today they're struggling to pay salaries. So as CFOs, our role is more and more evolving because we have our job also to protect. Right? If we don't question, if we don't make those questions, I know we make enemies to most, but that's fine if it's taken in the right spirit because we are ultimately, ensuring the survival and the growth of the organization. So that's where, we play a positive contribution there. Thank you.
I think...
So one clarification is that a typical VC makes money on 2 or 3 bets out of 10. I don't think that CFOs have that kind of liberty. Or do you now?
We want to make 100%. So we'll look at it even more critically. In our case, sometimes it's not funding, but sometimes it's, getting that manpower for a project or committing a cost to a project is funding for an organization. So that's where we can control it because I've seen many a times there are, hiring which is done in December, which is done in December end. And, in that, if you're falling in Jan, December, in that year, it's just 15 days of salary. But the moment you look at it in the next year, it's a full year impact. So if you don't have a full year revenue to support that salary, I'm the first to question because, whenever a hiring request comes, we first see how is this role going to play out in the next 1, 2, 3 years? How are we going to generate revenue 2x or 3x of what we are paying this particular individual? Or we want to spend for this particular unit or department. That's where the critical questioning happens. We have no scope for making a mistake unless a VC who's, playing a punt.
I think your question was more with regards to strategic acquisitions, right? What role the CFOs would play doing that thing. So I think that role is going to increase day by day because like I had mentioned before, like my respected co-panelists also mentioned, the role of a CFO is not just restricted to budgets and balance sheets and cash flows and assets and everything. Now they are also going to drive business transformation. Now business transformation happens through inorganic or organic ways both. So when you're making strategic acquisitions, it's not just a CEO, but I think the role of the CFO is also increasing day by day because since they are integrated with all the functions of the company, whether that acquiree is going to be a strategic fit for the acquirer, I think that question CFO can answer better than a few other players in the market. So I think that way, the role of cherry picking the right investments like a VC, keeping all the risks in mind and the resources at the disposal, because at the end of the day, the liability side also has to be managed. The sources of funds, they have to be put to use judiciously, which I think only the CFO and his team can do justice to going forward, along with the CEO. So, yeah.
Yeah, thank you. So do we have time for one more question? Yeah. You have. Okay, so.
So,
We'll
little
take your
probably.
question next.
Can you hear me? Yeah. So,
Yes, we can.
just wanted to take a clue of the recent scenario which is happening. So, I have seen, obviously, it is in the news that one of the fintech companies going bust with the valuation of whatever multipliers to the zero valuations. So, as everybody is agreeing that with the ever increasing the role of the CFO is now looking at getting into the shoe of the CEO or ultimately the ultimate business management. So there are the new age promoters which has the larger ambition of growing into this digital era and the fintech companies and so many things are happening around. So I have two questions basically. What we should learn out of this debacle, so-called, as a CFO, and how do we improve ourselves? Getting into this, not to getting into this situation like this as a CFO.
I'll probably take that. So it's not related to only fintechs. Okay, so you look at any of the startups these days, and just go back, say 3 years back or 2 years back, all the startups were just chasing valuation. They were just asking for VC money or a PE money, and no matter how your burn is, how much is your burn, at that time it didn't matter. Okay, what VCs and PE were looking at, what is your valuation, they were just pumping money. In the last 12 months, we have seen a drastic change in the way VCs and PEs are even looking at their investments. That has gone away from the valuation part. They're now come back to profitability. And that's the reason this funding winter has come in, where they've tightened the screws and they're saying that, look, only if the startups are profitable, we are going to pump in money and new investors are coming in. If you are not profitable, you are not getting the money. So for a CFO or a founder or for anybody who's running a business, profitability becomes number one point. And on profitability also, even before profitability comes your cash flow. So cash is the king, and that people have realized over the last maybe 12 months or so. So I think the focus has clearly shifted from valuation to profitability.
Sustainable profit.
Yeah,
it is more of a sustainable
it's more sustainable. It's more logical, right? If you don't have cash and if you're not profitable, how long will you keep on running the ship, which is a sinking ship?
Maybe you can take your question
Just
offline.
one point. Everyone has heard about EVA concept, which was some time back, around 10 years back and all. I remember Boston Consulting Group had come up with a solution called CVA, that is cash value added. Instead of enterprise value, they were working more on the cash component, how much cash has been added into the organization on at every stage. So that was basically what I'm taking the clue from Ajay.
So that brings to an interesting quote: sales is vanity, profit is sanity, but cash is reality, right?
Absolutely. Yeah. Thank you very much.
Questions?
It has been a very insightful session.
Yes.
You have shared all your practical and your valuable information or your insights here. And audience, you have been so wonderful. I hope you have got the answers to all your questions. And thank you again for this session. Thank you.
Thank
More
you so much.
questions can be taken outside.
I think the lunch is calling.
Thank you for